Hey there, dividend growth stock investors. It is Colby, the DGI Crab, coming to you with the Great ETF Race, episode 10. Wow, big milestone here. Big 10th episode special here, where I am taking 8 extremely popular dividend-focused ETFs, investing $5 a week every single week into those 8 ETFs and seeing which one is going to come out on top. Will it be the higher yield, lower growth, or the lower yield, higher growth? Fed had some pretty consistent front runners here for the last few weeks, but hey, since the last time I did one of these episodes, we've had a presidential election. We have had another round of rate cuts by the Fed, so it's time to see what this has done to shake up the race. If you are new here, this channel is all about dividend growth and acquiring income that's going to grow over time so you can build up passive income that you can retire off of and count on in those retirement years. Now, I'm not a licensed professional financial advisor, so don't take any of this as financial advice. You should always do your own due diligence before you invest in anything. But what I want to show with this series is you don't have to have a lot of money. You don't even have to have a lot of knowledge about individual stocks in order to invest in the market and get a nice pile of passive income built up. You could pick 1 or 2 or maybe even 8 quality ETFs, invest into them on a regular basis, and watch that passive income grow. So let's take a look at where everything is standing so far. So like I said, $5 every single week into each of these 8 ETFs. So now that since this is a bi-weekly series, I do this every other Tuesday. You can go to the playlist and watch the previous episodes if you like to see how the race has shaped up over the weeks here. But what we're looking at right now is a new front runner, VBR. The Vanguard Small Cap Value ETF is now on top. And what could the reasons for this be? Well, some might say that having a Republican president and a Republican administration could be good for loosening up regulations on some of the smaller businesses that could encourage their growth. That might have something to do with it. I might think that I'd probably be a little bit more inclined to believe that the Federal Reserve cutting interest rates is probably going to be a good thing for small businesses that may be a little bit more reliant on borrowed money in order to grow. That's all just speculation on my part. There's enough individual companies within VBR. We're talking about 700-800 companies that are in that ETF. So it's great to see that it's growing quite a bit. And there's probably a lot of different reasons for why it's doing so well. But because it's such a diversified ETF, one windfall in one particular company or one sector is not going to have a massive impact on the overall value of the ETF. But we've seen as a collective here, VBR is a front runner for the first time. Now, in the meantime, SPYD, the State Street High Dividend Yield ETF, which has been on top or at least in the top 2 for weeks now, has dropped all the way down here into 7th place, which was quite a wild shift here. It's been a back and forth between SPYD and DHS, the Wisdom Tree High Dividend ETF that have been in the top 2. Wisdom Tree still holding on to that number 2 position right now. But SPYD didn't necessarily see like a drop in value. We've just seen a lot more from the more growth-oriented funds as they've jumped up and taken those top spots. VBR in particular, but VYM, which has kind of been a bit of a laggard in this race so far, has now moved up to the 3rd place position here. It is just a little bit ahead of SCHD, although they're pretty well neck and neck. And then VIG coming in behind them, and DGROW just a few pennies behind VIG. So kind of an interesting thing here is if we look at this, we've got the small caps way out in front, and then we have a high yielder here in DHS next. But then VYM and SCHD are 2 very comparable ETFs in terms of starting yield, and it's just basically the Vanguard versus the Schwab higher yielding dividend ETFs that are neck and neck here. And then you've got VIG, the Vanguard Dividend Appreciation Fund, and DGRO, the iShares Dividend Growth Fund, which are similar in strategy, or at least what they want to achieve, where the starting yield's going to be a bit lower than VYM SCHD, but the growth rate should be better. Now, SCHD has been beating all of them in recent years, which the internet will always be quick to tell you. But it's just very interesting that you've got VYM, SCHD neck and neck, and then VIG and DGRO right next to each other. And then the higher yielding SPYD falling behind. And then finally, VYMI. The only non-US stock holding that I have is the hyper-diversified VYMI, the Vanguard High Dividend International ETF, which has approximately 1,500 holdings in it. This one is actually in the red. So pretty much just about every episode, I believe, have been in the green on all of these, including VYMI. But this has not been a great week or two for the international markets. Again, we could speculate on why that is, but I wouldn't get too ahead of myself with any individual theory, because when you've got a basket of 1,500 stocks, give or take, like you've got at VYMI, there's probably not one single factor that's going to impact whether it's having a good week, a bad week, or somewhere in between. So what I like to do is point out smaller milestones with this, because if you're investing just a little bit every single week, which is what most of us middle class retail investors are trying to do, you've got to celebrate the small milestones, because you're not going to build up a portfolio that yields 50 grand overnight. It's going to take some time and some patience to do it properly and with high quality stuff. So you got to take a look at the small things here. So obviously, hitting the $100 mark invested in each of these 8 ETFs is a very nice milestone for me. I'm very excited about that. I think the next major invested dollar milestone for me that I'll be looking forward to is having $1,000 overall invested into this portfolio. That's going to be coming up here fairly shortly, in about a month and a half or so. Another thing that I'll be looking forward to is getting to the point where this ETF has paid me out $10. Right now, it's to date, since I started this a few months ago, it's paid out $3.95. I believe by the time the next round of dividends get paid out in Q4 for all of these, I'll be pretty close to that $10 mark. I may not quite be there just yet, but the dividend payouts are going to get bigger every single round, because I continue to just gradually increase that position over time. And all of these ETFs, I'm expecting dividend increases in some form or another. Some are going to do better than others, like VIG, DGRO, SCHD. Those will probably be the ones that give me the biggest dividend increases. But there will be really steady players like VYM and DHS that are going to do that as well. And they might be steady Eddie players in years where maybe SCHD or DGRO or have lesser increases. So there's a lot to unpack with the different strategies and styles here, but I think I'm going to be at that $10 mark here by the end of the year. I'll just have to wait and see on that. Another thing is another small milestone here. My annual forward dividend income expected from my positions in these ETFs has eclipsed the $25 mark, which is great. So the next goal I'm looking forward to on that one is getting that to $50. And let's see. And as I said, I'm still in the green here on 7 out of 8 of these, as VYMI has stumbled a little bit. Out of all of these, though, SPYD and VYMI are the two highest starting yielding ETFs. And for that reason, I'm probably going to see the least amount of share price appreciation on those. These are going to be more reliant on the larger dividends that those pay out. Because as you can see here, the annual forward dividend income on both SPYD and VYMI is above $4, and the other ones are all in the $1, $2, or $3 area. Now, over time, something like VIG or DGRO will eventually eclipse this number, because even with dividends reinvested, the larger dividend payout increases that you can expect to get from more growth-oriented ETFs will over time eventually overtake the higher yield stuff, which is why I recommend that kind of stuff more for younger investors, whereas your older investors with less time need to start with the higher yielding stuff, because they won't have as much time in the market to feel the benefit of the higher dividend increases year over year. And that's the thesis of the channel. That's what this is all about. You want to invest in quality stuff And all of these ETFs are quality, but depending on what your actual age is, some are going to look better than others. So if you're a tier 4 investor, as I call it, a 54 and older, stuff like SPYD is going to be really useful for you, maybe DHS. And if you're more in the younger years, then you'll probably have more time to enjoy share price appreciation that you're going to get more of with VBR or VIG. And then anywhere in the middle, tiers 2 and 3, if you're in that 31 to 53 category, then that's probably going to be stuff like VYM, SCHD, DGRO2, sure, for that matter. Really, these 5 here in the middle are going to be the big ones. Those are going to be the ones that you'll most likely be paying attention to in those middle years, where you're going to get kind of mid-level growth and mid-level starting yield. So that's the video for the week, guys. Episode 10. That's a milestone in and of itself. If you've been with me since episode 1, give me a shout out in the comments below. Let me know which one of these ETFs you think is going to be in the final or in the top position for the final episode as we approach the end of the year. See which one 2024 crowns the winner, and then we're going to keep going with even more in 2025. And if it's your first time here, again, I feel free to go back and check the previous episodes and see how this has progressed along. Slow and steady is going to win this race when it comes to dividend growth investing. Build it up correctly, and you'll be very happy in your retirement years. Links to other helpful videos in the description below. I encourage you to go check those out, and you can email me any questions at dgicrab@yahoo.com. I'll always respond to your email with an email, but if it's something that requires a little bit more of an in-depth answer, with your permission, I'll do a video response so we can all help ourselves become better dividend growth investors together. Take care, everybody, and I'll see you on episode 11.